Okay, hi there traders, and welcome to TradeSetup and the live stream for the 28th. A couple of days away from the grand final down here in Melbourne, so I'd expect a bit of a quiet afternoon. There's a public holiday tomorrow down here, so you'll probably find that a few people are already prepping up for their weekend festivities. I know I'm trying to get organised, but it's more trying to pack everything up. So markets today, not much happening. They are up slightly, I think. It's sort of maybe heading back down to negative territory. We'll see how that goes. I don't expect it to be too much action after what happened overnight in the... G'day, Nathan. How are you, mate? What happened overnight, or what the lack of action overnight in the US. It did kick up a bit, but I think... oh, look... Well, yeah, volume is low today, yeah. So I think we're generally... I was just discussing this with someone else probably about half an hour ago. Just about the lack of activity in the Australian market compared to what's happened in the US. We're all sort of sitting on our hands, stuck in a range, just waiting for something to happen in the US. All the bears are out. No one's willing to buy it up in the Australian market, on the ASX, buy it up too much, or load up too much. I think people have more than anything have just thinned out their position, their holdings, eased out of some, probably just take the risk off the table, potentially looking for this big beating in the US. So we'll discuss that in a minute. We'll go into more of that in a minute. How are we all going anyway? How are we all sort of viewing these markets at the moment? Not too many people in today, I'm guessing. I was a bit late on today. Sorry about that. I tend to go off my watch, which is about 3 or 4 minutes behind, until I realise that I'm a bit late. So, bit of a late start today. Probably prepping up for tomorrow. All right, let's... we might as well get into it. Today, what I want to chat about is just the usual. We'll go through what's happened. We'll have a bit of an overview just of where the market's at and what the US is doing. I think they did trade, the S&P did trade into all-time highs overnight, but they backed off into the close. Did nothing most of the session. It was pretty much hovering around flatline again yesterday until, the tax reforms, the framework, some new framework for the tax reform. But they've done nothing really. There's nothing that they've let out in regards to tax reform, and they're only talking about it now because they've given up on the healthcare at the moment, so they're going back and forward from one to the other over there. So it's really just, for me, it just seems like a lot of talk just to keep buoying this market, to keep look like they're doing something, but basically they've done nothing. The government, since they've got in, apart from talking up the tax reform. But I think the issue is, and what traders are looking at, so okay, if you're going to cut all these reduce the tax brackets from 7 down to 4, 3 or 4 different tax brackets, and reduce the tax rates, drop the tax rates, where are you going to get that extra income from? I mean, so that means their budget deficit, or the budget, is going to blow out a bit because they're lacking in that tax revenue. So it'd be interesting to see how the market takes it. I think it's a bit of a huff and puff at the moment, a bit more talk than anything else, but the market, it was not convincing to the upside. Bit of buying on the dips. You get that traditional, buying on the dips, and that's the way of the market at the moment. That's the lay of the land. Obviously, so what was it there? Money's got to flow somewhere. Funds have got to flow their money somewhere. And at the moment, there's not many other places to put it bar the market into stocks and shares. Even though a lot of the valuations are very high, we all know that. The market's overextended, but there's nothing to say until... basically, we need a trigger from the US. So I think, I don't know. Look, I don't know what that could be. It could be anything. I thought there might have been after earnings a while ago that they could have sold off, but they didn't. They've just kept bouncing high. So half decent earnings continue the trend higher. Over in the US, we're talking about. So, we've had this argy-bargy between, was it the US and North Korea? Thought might have triggered a bit of selling, but even the selling from a while ago when the news was... Oh, I'll get me on the screen. Sorry. No, I want to do this one, don't I? So, here we go. We'll minimize that. So here we are. So I think in the past it did trigger a bit of a sell-off when you get some news about North Korea and then look at another missile test. But now it's just getting pushed to the side. No one really cares that much anymore. So it's more of people want to see something happen. Otherwise, it's just talk. It's just more talk. And this type of thing's happened before. I think when I was in the markets after the GFC, when anything else come out, there's news of another attack. It started off, the market was reacting to it quite big, especially the euro, what we were trading back then. The market was reacting to it, but then it got, as time went on, people stopped reacting to those news flows of further attacks or things like that. And I think it's a bit of the same now. What's happening with North Korea anyway. So I'm sort of discounting that until potentially something kicks off, which I do see there's quite a high potential with a couple of egos floating around in the US and North Korea now. I'm expecting something to kick off, where there's not going to be so much talk and there's going to be action soon. Whether it's the egos that are kicking it off or something's probably going to be done with that situation soon as it escalates. So that could be a bit of a trigger, but until then, we don't know. Interest rates, potentially another interest rate rise is looming in December. I think the odds of that are now at about 80%. The market's factoring in 80% there's a chance of a rate rise in the US for December. But it's probably going to be well and truly factored in. You might get a bit of initial reaction on the US and bonds and things like that, but maybe in the market, but I think it might be quite muted. But it may, just guessing what could happen. It may start at, going into Christmas too, start a bit of a sell-off, some profit taken into US, which may start to, find that there's a bit of resistance starts forming, but we'll see how it goes. How that's going to affect our market, I don't know, because we've been doing nothing for the last few months, banging around sideways between support and resistance the last few months. We'll get that up now. What's that? That's nothing. Yeah, you can see here, price action that's probably a bit too close. You can see we just seem to have been bouncing around. We had that initial push up from the highs when I thought we were going to push up through 6,000, back off a bit and then take off. Originally, I thought that was going to start happening once we broke through here to 58. I thought we'd find a bit of a higher low, and that's going to push up through 6,000, considering the US was quite positive then. Instead, we've just built these lower highs. We were holding higher lows for a while there. If we can draw that up, I'll get my little... Oh, come on. All right, let's do it the hard way. There we go. Now, so we're sort of getting these lower highs come across the market, and then I thought we were getting that. So it looks like potentially we're getting this shoulder, what we call a major lower high that could really extend the market down. You've got that leg down there, and if we take it, say, from here, potentially, if that's even, somewhere around the 55 mark, we still got the potential to move down there, especially the way we're looking at the moment. The market doesn't look great, but we've not looked great before and bounced back up again. So it is still looking a bit choppy on the ASX at the moment. If we just draw a bit of support, so there's a bit of support through here. Still holding up. There's no reason why it can't hold up. Bit of resistance through here. It's just we're getting that lower highs. So as we go along, it's probably where we're trying to guess what could be happening. Yeah, I'll have a look at the SPY in a sec there, Brent. I just want to touch on a few things on the SPY, just what's happened in the last few days. Hopefully everyone could take something out of that and enjoy that. But yeah, this market looks like a potentially roll over. So we'll see how this goes. This is a daily chart. We'll look at the SPY in a second. What we'll do is just have a look at where the other markets are situated. We've got the Dow. Oh, no, that's not it. What do I want to see? Markets, indices. Here we go. So the Dow, that trend is still breaking high. It potentially going to, extend into new highs. But, we're coming from, and this is what's interesting. If we go back, let's look at a weekly. The weekly's pushing up into, overextended to the upside. But look at it previously. We've been, we've been overextended here. And then you can see the price action that matching just sort of went sideways and then bang, up we go again. Had a bit of a pullback to the MAs here. That went to about the 50% level on the stochastics, bang, up into overbought. So we could just be doing the same. We might go sideways here, might have a bit of a pullback correction back to the MAs, and then up we go again. We don't know what's going to happen. And this is the thing with trading, I guess. I've always tried to push myself to get out of the habit of second guessing. I like reading the news, figuring out what could happen. But again, it comes down to trading what you see. If you're not trading what you're seeing, you're trying to guess the action. And if you've got it right, good on you. But if you've got it wrong, you could either be stuck on the sidelines, selling too early, not getting to a market that starts to break higher. Even in bad news, these markets tend to like the bad news, like the bears, and then just grind high and then turn on a dime later on. But just trying to keep out of that habit of guessing what is going to happen, thinking that we're going to sell and just missing. I mean, we haven't missed much in the Aussie market, to be honest. It's been banging around, so I think that's what's happening. I think a lot of people have just lightened their load on the ASX. What's everyone else's thoughts? ASX is stuck. There you go. I think you got it down to a T there, Brent. It's stuck, not wanting to move higher because of the US, I think, capped by what could happen and what could drag us down, but also not going down because of what's happening in the US also. This market, the US is grinding higher. It is looking strong. Look at the broader market. Is that the S&P? Yep. The broader market is still trending high. There's nothing at all, no indication at all that this market's rolling over. And you can see, I think they did make a intraday, intra-session new high. Did it close? 28. No. So the S&P just fell short slightly of closing an all-time high, a new all-time high. There we go. I've got it. So yeah, it's all looking good. Where's the DAX at the moment? European markets, it just kicked onto new highs overnight. What have we got? The FTSE. FTSE looks more weak than anything else, so that's got to do with their Brexit problems, I'm assuming. But still, the longer-term trend has still got that key level at 71, so they can hold. They can easily grind lower and then bang, build a higher low and then go. If you see that higher low build, I thought it didn't really play out anywhere in the past. They could be dragged higher. It's still holding the longer term trend, respecting that trend. And until they break through to 71 on the FTSE, then I'm not going to say this isn't a bear market at all, even with the problems they got over there with trying to work out what's happening with Brexit. Now let's go over to, we'll take a look at the futures now and I'm just going to get up the chart. So this is a 30-minute chart. The last couple of sessions have been good for us. We've had a couple of nibbles at that. So we've talked quite a few times. So we know there's quite a... If I just get it back, maybe I can show it on the 4-hourly. I probably haven't marked it up on this chart. No, let's just forget about that. We'll focus on the 30-minute chart and just the... Yeah. No, that's exactly right, Michael. It's one of those things, the market... It's the path of least resistance, and if everyone's loaded short, it's just going to keep chipping away higher. If you got these, if everyone's loaded long, and then you're getting people coming and try to second guess it short, and they just keep getting washed out of the market as the market just grinds higher. And that's the thing. This is what we've always talked about. Price action rules for me. I'll base all my trades around price action. I mean, you can take it's probably going to be a bit harder for me, obviously, but if you took all your stochastics off, I'll take the stochastics off, take the MAs off, you could still trade it because you're looking at price action, you're looking at zones, trying to go to a rough estimate, and then you're confirming that with price action potentially. Say we're trading this is the SPY 200, trading that, going down to maybe a 5-minute chart to get a trade on the 5-minute chart. Now, I thought it was going to wash out the highs and then roll over. Instead, we washed out the lows, popped out through the top, and then we rolled over. So it was a bit of a choppy action this morning. But just looking at that 5-minute chart for entries, or even I'll happily go down to a 1-minute chart. But you can still trade from price action, not actually what's happening with your stochastics. So yeah, I mean, that's the thing. They're more of an oscillator, and I use it for strength. I mean, the 30-minute chart for me was stochastics were quite overbought, in overbought territory. No reason just to go and sell into it, but you want the price action just to confirm what's happening. This market at the moment looks like, just to talk about this, so what we've done in the past was, it looks like we're just breaking to the top side. I mean, you can see this trend lower, that trend line lower. We just broke out of it this morning. So for me, I'm sort of hesitant. We're just pulling. We fell a bit short of a support zone at 56.27. That was yesterday's price action during the day. Popped up overnight, broke that resistance zone, that trend line, and we're pulling back. I'm expecting more of a higher low and just to grind its way back up again, potentially, or maybe a deeper correction on the longer term charts, because we've had quite a good push down from 57.03 resistance, got down to 56.33. Well, not that much actually in points terms, but that trend has definitely been on its way down. We may be falling short. There's a major resistance zone, support zone. I think it's around maybe the 56.27. It's a bit hard. I'm probably going to have to go to a different chart. Let's look at the ASX. Yeah, you can see that the ASX is falling short around that 56, low 56. Probably the SPY's got that low 56, maybe around 5600. Major support zone down there. So we fell a bit short of that. We may be edging high, another major lower high, and then head lower from there. But I think the difference in the price action from the previous few days, we've had a bit of a washout here, so we're looking for that washout. It held below that trend line, and then we got a good sell-off, whereas today we've sort of broken above that trend line, so we might get a bit more, choppy price action. Let's just see if that can hold up. Maybe this support zone can hold up through here, and we start grinding away on the upside with high lows. We'll just see how it goes. Yeah, no, that's true. Overbought and sold is only good as a potential area, but not as a trigger. Yeah, that's right. Yes, we got Brent using ranging markets, not everyone trending. I like to use it just as a bit of a heads up when if the market's going down and you hit a bit overbought on the stochastics. I don't mind looking as long as all my price action is holding as a potential zone. So I'm using stochastics more just to have a bit of a heads up of a zone where it could turn on the downside or the upside. You know that, say yesterday when it was oversold on the stochastic, to get more sellers in there to continue pushing that market down is a tough ask. I would never use stochastics. Okay, they've crossed to the upside, let's buy it. I mean, probably worked out all right in that. If you just look at it in this zone here, looking at it in this zone, see when they cross up, I wouldn't buy off that, and I wouldn't even buy with a break above this level. I'd rather buy off a shoulder in confirmation that you get buyers stepping in. So I'm always using price action. I think that's the key for it, and that's the key for me anyway. Everyone trades a different way. You'll get a lot of people will trade with MA crossovers, this, that, and the other, but I'd rather trade from price action because I think the action's going to be where people are going to place their stops. They're going to get nervous where they place their stops. And that's why you get these washouts. That was yesterday on the SPY. That's why you get a washout, because you know that people are selling it in here. They probably sold it up into a level. It's backed off once. You get more sellers in here. And you know that the ideal area to put their stop is just above the previous high, which is around that 56.78, just above this high. The market will go wash it out on the open and then bang lower. So that happens time and time again because it's got nothing to do with MAs. It's got nothing to do with stochastics. It's just purely that you know that there's going to be people there. The market will know that there's people there and tend to wash them out first. Same here. Probably not the best example here, but the market knows that if there's buyers up here, the late buyers we're talking about, a key level would have been just below 56.61 or 56.62. You know that the market's probably going to wash that level out or even wash out those highs because it's so close. I was expecting maybe a bit of a push up to 56.76, just to drag in a few buys and then roll over, but instead it's just fell a bit short of that zone. It's still respecting that trend lower because the next ideal level where people are going to hold stops is just above that 56.76 zone. So that's why I think price action is more important than any stochastics, moving averages, or anything like that. MACDs, they are all indicators of just to give you a bit of a heads up of what you could expect, but then you always got to drill down to what's happening with price action. That's my 2 bobs worth anyway. Yeah, it's what market should we be looking at there, Michael? Are you trading currencies or are you looking at something else? How'd you go, Brent? I was actually thinking about having a nibble on the SPY this morning, but it got a bit choppy. I was expecting it to push. My expectations on the SPY was more for it to open up, wash out this level, wash out towards the highs, and then roll over through 56.71 for a potential entry. After it's washed them out, instead of done it reversed, washed out both markets, both sides of the markets, which is not a bad sign. And that's why I'm more inclined to believe that this market's going to hold a higher low and start working its way back up again and do maybe more of a longer term. Oh, awesome. ASX200, yeah. All right. So you're going to look at the same sort of price action on the ASX200. Yeah, you'll get a lot of wicks is a good sign, but I'm always looking for, probably draw it up might be a bit better. I'm always looking for, on a downtrending market, I don't mind seeing a couple of moves higher, but you know your key levels up here, and then we don't know what's going to happen from here. Even if it pulls back here, we don't know what's going to happen. That's why I like to look for your lower highs, because in a downtrending market, when the market's heading south, a lower high is going to be, there's going to be a lot more weight to it than a higher low. And it's this move here. You can trade this move back up, but you've got to have it in context to an anchor level. You're approaching an anchor level, whereas you're always looking to trade, in my eyes, you're always looking to trade from contraction into expansion. And into expansion means, say this, for example, expansion could be lower. We're looking for the market to expand lower. It's been sort of, it's pushed lower. We've contracted, not really contracted as such, more gone sideways, but we're looking to continue that move lower that we saw originally. So you're looking to trade from contraction when there's been one leg, it contracts back into itself, whether it's back into the MAs, back to the, sort of against the trend, and looks to expand again with the trend. Yeah, no, you're right. It is looking like it's probably harder to see because I've only got this December contract. I haven't got a continuous contract on that. So yeah, that's ideally what I'm looking for, and that's why I would always look for, and that way you can base your risk. I mean, that if it does work out that way on the SPY today, that's great, but I'm just getting the feeling it's going to contract higher a bit on the longer term. I just saw your comment there, Alan. Yeah, so I think anyway, that's what we'll look at there. Alrighty, so what was going to go over now? So let's take a look at just a couple of these. I mean, a couple of entries. Just want to go over a couple of shorts that we've been looking at. Not Qantas. There was a couple that we did alert to, which are kicked off without us, and this is I guess is a key point. We just want to chat about these shorts. Is that difference between going short and going long? When things are not looking good on the short side, they tend to capitulate real quick. But when they're looking good, they tend to grind high, and you tend to get a cleaner setup on the long side than you do on the short side. So if we just go over, this is New Farm. I can't remember what I said. Let me just have a look. I'll get the chart up on what we brought up. So as you can guess, today is a bit more of just randomly talking about different things, and then we'll chat about the market in a sec. Open up a bit in a minute. I'll just sort of talk about these two. It's maybe New Farm, and what was the other one? The other one was I don't remember now. FMG. FMG was a bit of a short trade we were alerting, but it didn't play out like I expected. It just dropped. So you're right when it just drops and it goes on without you. It's always nice. NUF. So here's the last chart. What I was looking for, you got this major move higher. You had that one move down out of this, sort of breaking down that move from the highs, sort of breaking down. We're looking for that secondary move. So the reason why this trade, well, we thought it was going to be a nice little short. You can see that nice healthy move lower, and it's grind its way high with high lows, high highs, but that's really not convincing of buyers stepping up to the plate. It's not accelerating higher at all. It's just grinding its way high as you get opportunistic buying, your bulls that just want to jump in. And then what we were looking for at that stage is maybe that secondary move down, that secondary move lower. So you had one from 10.25 down to around 8.25, and we're looking for that new one and hoping it was going to be around from 9.25 down to, what's it, a couple of bucks, 7.25. So this market could have a bit to go. What did I have just there? New Farm. So if we go back over the New Farm, we could be heading down to 7.25. I think that might be a bit of a stretch, but we'll see how it goes. Problem with this, it went on without us because I was really looking for a shoulder. I wanted to see that after it broke out of that move there, and if we just draw it up, it probably just broke straight down without even setting up in my eyes. So you had this little nice move down. Yeah, it could have been an entry there, but this is all in hindsight. I like to see things, you know, break through a trend line and then build a lower high like that, rather than just go bang straight through. So yeah, I thought it's just a good example of when you get it right on the short side. They really, there's some tough opportunities. It's a bit of a different style of trading than going long when the market's setting up and it's grinding higher. What was the other one? FMG. FMG, maybe a bit of the same. Let's actually just make that bigger. Where are we? Here we go. So I think FMG, it showed a bit of the same price action. So you can see that market's pushed higher. Yeah, we had that cap at the top there. Potentially that lower high to work off just in here. But it was before it broke down, so you could have easily extended in here, held that support, which sort of coincided with a major high low here at about 540. So there's still room that this market could, you know, on the FMG it's pushed down to $5. It could react off $5, sort of grind its way higher, and then we get that major, you know, lower high on the longer term front, and then we start that major leg lower. But I just not happy to trade it just here. I'd rather see it set up. But yeah, there's a couple there that we missed on that. Yeah, Qantas. I was actually going to send out. Let's have a bit of a look at that then. KI discovered Eldorado. All right, I'll take a look at that in a second. Qantas. Yeah, geez, I can't even put in the code. Whoops. Let's look at a chart on Qantas. Probably another one I've got my eye on. You can see that market, if we go back to start off at the monthly, it's up at a key resistance level. That $6 level, you're probably going to get a bit of reaction considering the way it pushed up into that zone. So the idea behind this one, it's had sort of equal moves up. You've had this push up off $1, took it to about $4. We had that good healthy correction lower, back down to about 250, 275. And that's probably, that distance up is probably equal to the secondary leg up into 6. So there's a few factors there still. Nothing's changed in my view there. It's just it hasn't set up. It hasn't really broken down. And I think that we were looking for a seller. Was it through 550? We'll draw that up. It's changed a bit now, but I still think it hasn't. My short premise has not really changed until it breaks up or breaks down. But I think there is potential on Qantas. You look at that. I think that's the key now at the moment. So we could. This is potentially going to be that lower high. It's squeezing in at the moment. Yeah, Helen is still. I am convinced that I'm still convinced that this thing could sell off, and there could be a bit of profit taking. Who knows? I mean, really, who knows? It's done 29 million, so it's done quite a lot today. If this overall market rolls over, I expect this to sell off, but I'm not really looking at that 550 anymore. It'd be more of. Look, we'll have to see. If we do sell it through 550, your stop's going to be up about 6, so 50% stop. With the potential this thing could have a good health, then your first level of reaction could be around that 510. That's not your 2 to 1 at all, but I think that's going to go through. It's going to have a good move lower. But we'll see. It hasn't set up just yet. I wouldn't buy it, put it that way. Would not buy it up here. The way it's gone, into a key resistance zone. It's been extended, 2 moves up. I don't like that as a buyer. Would not buy it up here, and I think there's going to be a few people easing out of positions here. If they've got some healthy positions on the way up, I think there might be a bit of profit taken up there. Yeah. Oil's holding. What's everyone's view on oil, by the way? Because I'm just starting to see that it's picked up. It's held in about around 52. I think oil. I want to see what happens with oil. I think there could be some opportunity there with some oil stocks, but I haven't really had a good look at oil itself. It's not bullish by any means. It's a bit of a bounce. We'll see how it goes. I'll see if I can get a chart. Oh, I can't get a chart. No, I won't try. All right. Let's have a bit of a chat more about, is anyone looking at anything else? We've talked about our couple of shorts on here. We've got a couple of longs, which are, well, honestly, we're struggling a bit. The market's not as easy to trade just now. AUB was looking good right up until today. AUB is one we got in on a bit of a pullback yesterday. It triggered our buy at 13.18, and it's just sold off down through there. It's a bit of a smaller one there, so it's going to be a bit choppy. We still got our level down at 12.50. It hits us on 12.50. Okay, we're out, but that longer term still looks quite healthy. If we can build a higher low here, I think that's going to go through 14. We'll just see how it goes. What else we got? Waiting for Can. I thought that could trigger a bit of an entry, but I'm expecting that to hold these highs and build from a bit like this. The previous price action, we held higher lows here, and then we had that nice little run up to 150. If we can do a similar type of price action here, hold some higher lows and then bust up through, I think it's 124 or so, 122, 3, 4. I think we can take out those highs. It's going to be a bigger ask because it's going to be the second leg up, and we might have to do a lot more, work at these highs, dragging in a few more buys, but we'll see how that goes. What else we got? We just got in a new one today, MGE. The actual chart, that looks good. It's just ticked off at 281. I was discussing this one with someone just before today, and yeah, they are an ETF, exchange traded fund, so they could be set up. I mean, they could have a bit of a trouble on the downside if this market rolls over, but really what I'm trading is the price action here. This price action is coming off, you can just see it. It's had a push up, pull back. It found a nice little base at 240. We've extended up into the highs, built a higher low, extended up, had a nice healthy correction down to 270, and then this is on the weekly, and then we held that 270 zone, even a minor higher low. We built a little higher low at 273, and we just busted up through 280. So it's looking good. It's looking good for a push up through 3. Obviously, you could have a few problems if the market rolls over, but I think we're trading what we see here. I just want to trade, I want to stick to my rules and stick to my guns. Trade what you see, not what you expect. So we'll see how this one plays out. I think it's times like this you've got to look for those healthy setups. What's the ETF? It's called, it's MGE. MGE is the code. Magellan Global Equities Fund. So I think the chart looks quite nice. Yeah, I mean, if they keep marketing well, this thing I'd expect to see it up through 3. If it falls short of 3, we may have a problem. If it falls short somewhere around 290, it has a bit of extension, even 285, and starts looking like it's going to hold its a lower high, then we could get another move down and we might have a bit of a problem. Do they mirror the market? All they're really doing, depending on which one they are, the STW, if you look at that compared to, that's the top 200 stocks compared to, God, that doesn't look so good today. The XJO, which is the top 200, they got very similar price action, but because I think they're a bit more jumpy because it is traded, but in essence, their aim is to mirror whatever underlying they traded. So the STW, for example, is the top 200 stocks. It moves and flows with what the underlying ASX is doing. They try to keep a mirror image of the the ASX200. Whereas others like that fund that's got a few underlying stocks, MGE, that they're trading. So it's more, that ETF's slightly different. You've got other ETFs. You've got ETFs that track the ASX over in the US. They're traded on the US exchanges. I don't know what the codes are, but essentially they mirroring it. The charts are looking the same. There is one here. It depends what they're trying, what the underline is. Magellan. What did I say? Who's giving me stick? He's from Melbourne. Thanks, Paul. That's why I steer clear of pronunciation. Not very good at it, mate. Alrighty. Yeah, so that's that one. What else we got here? WGX was a little goldy, was looking good. But obviously gold sold off last night, so it's still holding up, still holding that trend high. There's no reason to get out just yet. We'll just have to see how it goes. It's probably going to struggle up in this resistance zone. 215. We got to 214 yesterday, so with that little pop up yesterday. We'll just see how it goes. Thanks, Alan. There we go. I got some support. The boys are picking me. Alrighty. Is there anything you want to look at, guys? We're going to have a bit of a... Chuck some codes in. What did you have before, Nandor? Before everyone started bullying me. KAI. Cool, that's gone like a rocket, that one. All right. 6 million minerals. What do they do? All right, just minerals projects. Australian Nickel Exploration Company. Okay, you're into nickel. Western Australia nickel. All right. So that looks like that came out of nowhere. Obviously, had some good news. Was that today? Did it have any news in the last few days, or was it just today? Let's just see when the 55%, that was on the 22nd. Rock's highly prospective response. What was that? The 21st. So on the 21st, it had an announcement at just before 10 o'clock and it was up 5%. The next day it was up 55%. Okay. '22nd, 21st. Yeah, so it's had a good little run up. So yeah, just on the back of news, that's had a good kick higher. Yeah, to be honest, I wouldn't go near it just yet. Obviously, with this kind of move, you want a bit of heat to come out of this market. You know, build a higher low, hold some higher lows, maybe even if it just sort of, you know, we've got that strong move higher, can push back and just start chopping around, but hold that higher level and then look for an entry. Yeah, but because you could easily get that straight back down again. Could easily come straight back down to 3, 4 and wipe you out if you get too long. Yeah, it looks good. Would have been nice to get involved in that, but even if you were trying to buy it technically, I probably wouldn't have bought that because the market's heading south. So it would have been a tough one to get involved in unless you knew something was happening. You know, trading it purely on a fundamental basis, expecting some news to come out. What else we got? RHC. Let's take a look at that then. Ramsey's. I could say that word. Good. There you go. Oh, Ramsey's not looking the best on the weekly. It's at a key level now, isn't it? I see that as a key zone. I just want to go back to... All right, let's just draw that one up. All right, so key, obviously that key level, which you've had the market, you can contract. We can see that it was caught between really just, it was more consolidation than anything else, not so much contraction. It didn't go with lower highs, lower lows. It was more going to lower lows and rebounding all the way back up again to test the highs. You can see these sorts of moves down here, down here. But what it did, nice and healthy, it held that higher low in here. So you get a nice key support zone around 56, which produced this leg up to the highs around 81. What we're doing now is really, a lot of heat's coming out of that market. The problem for me, would have been nice in here, you know, if you could have bought it, but it hasn't held up and it's just broken. You can see with this latest move down, it's broken down. It's got to hold up. Oh, I'm not even keen on thinking that's going to hold up around that 62 zone at the moment. And if you sort of extrapolate that out, that move down, what does it come from about 81 down to 60, say 61, it's nearly 20 bucks, about $19. From 75, where does that take us? 55, 56, 57. So it's going to, it's probably back down to that support zone. So it could easily have another leg down, retest that major support, which in essence, I think that longer term trend's not looking too healthy then. For continuation anyway. It's just this latest move down that's not really nice. I wouldn't look at it anyway. Yeah. Yeah, it is. It's down at sort of that zone where if we can hold up and start building some high lows off here on the daily basis, you can see it's taken a lot of effort to push it down to sort of that 62.50 mark, or that, you know, through 62. A lot of effort to push it down there, and it's oversold down there. So the strength of that move down, we're just going to see if it can hold up and start to build that support, even after that minor washout of 62. What's that low there? 62, say 62. Minor washout of 62. If we can start holding some high lows, yeah, it could be worthwhile. Could start, but then it could only be short-lived as we start to build, you know, more of a major lower high. We'll have to see. I'll see if we can get that drawing back up. So if we pop up, if we do hold it off that level, you know, say that support level there, we've come right down into it. If we start holding, if we get this type of price action, I wouldn't be keen on it, because that's that grindy price action like we saw in New Farm, and what is it, FMG, just prior to another healthy sell-off. So I'd be concerned if I see that, but it could be worthwhile. We'll just have to see. I'm expecting more of that major lower high here than anything else. Took us up strongly today. I took stops on it, luckily. Yeah, look, if it's a bit of a washout, it'd be interesting to see how it plays out. I think it's early days yet. Like I said, we need to see something. We need to see some buyers step up to the plate to work it up off that support. What do we got next? Greg. Welcome, Greg. PME. Yeah, this is a killer. I like this one. The reason why... Let me just have a sip of coffee before I get started on it. I do like PME. If you go back to that weekly, it may come into a bit of resistance. I think it's, for me, personally, I'll probably find it a bit late to buy into here because you're going to come into that $6 zone. The beauty is you have come off a major high low. I do think this could have a bit of work to do. Just the scale of it and where it's actually traded up to, and it's had a good run up 2015 and 16, so good couple of years where it went from below $1 all the way up to $6.50. I'd expect a bit of heat to come out of that move, longer term move up. Whether this is going to prove to be maybe a major lower high at $6, who knows just yet. It hasn't proven anything just yet. It would have been nice to buy it earlier on. So we were looking at this around this stage. I just thought it wasn't not enough volume, you know, for us anyway. The volume's come into it now, but I like the setup through, and this is what we look for. You know, you've got that. Oh, if I draw that a bit better, so you've got these lows, and that's, you can see that type of setup here. After this move down here, you know, you had this pop up, so you got the major lower high here at that stage. It moved down and made new lows, but then it's turned around and retraced all the way back up to those highs there. And then what we've had from there is a move down and really just a wash out of that support zone. So you might have found there would have been a few people sold below there, had enough of it, whatever. But then it's turned and rebounded and broken straight back up through, you know, with this push up here through this lower high. So that's a really good sign. It's bent a lot of, you know, it's taken a lot of months to develop that trade. But then you can see all this move down with lower highs, lower lows, all the way back down. And we've sort of got this move down to 470. And it held a higher low off there at 490. So in context of what's happened in the past, reading from left to right, starting with this sort of high, you know, what we went through here, the market's broken up through that lower high. So longer term, okay, there could be something happening here. And this is the reverse of what we just drew up with, was it RHC? That grind lower. That grind lower, when after this price action, is it's a bit of a heads up, like, okay, something's happening here. And it would have been a nice buy. Ideally, the entry that I see is through that 520, a push up through 520. You had to wait a couple of days, busted up. Next day it was down, retesting it. And then the last 3 days have been pushing up. You've got, that would have been an ideal entry through there. For me, like I said, a bit late just now. You've got this major high low that we've worked off in comparison to that around 440. But now we're coming into potential resistance zone. We may just extend that. If we can see that measure up, that measured move, has it a guess somewhere around 650, which takes us up towards sort of those highs. We may push straight through 6 and find that we're going to find some serious resistance up at around that 650, 60 zone. Or we might just find, you know, fall short at $6 and then roll over from there. We'll just have to see how it plays out. Like I said, for me, wouldn't buy it just now. I want to see an ideal setup where I've got risk reward, I mean, for me, if I was going to buy it here, your risk has to be all the way down here, even below 470. But then your return, your risk reward is probably going to be inverted. It's going to be say 1 to 2. You know, for 2 points loss, you're only going to gain 1 at the moment from that trade. So that's why I don't like that at the moment. But the overall, that price structure on the weekly, well, is still quite nice. I just think it's got a bit of work to do. So ideally, if I can draw that up, longer term on this one there, Greg, it's probably not going to come out that well, is it? If you can see that clear, we've got nice healthy move up. I really just want to see, we've had that extension, so that's from here to here, say, that extension up. We've had a healthy correction lower, another pop back up. We've built that lower high, sorry, that higher low up here. We're starting to head back up. So from here, ideally what I'd like to see it contract a bit more and hold some inside higher lows. If we can get some inside higher lows and then a nice little potential entry setup, and by inside higher lows, I mean above those lower highs here. If one develops here, so we fall short here, we come back down, we start contracting. That's what I'd want to see longer term. And I'd like to see that. If we see that, I think it would push up and would dent. That's where I'd probably be confident that we're going to blow up through 650 into new highs, but we'll see how it goes. PME, so we've gone through that. You happy with that, Greg? Do you believe me, or Michael, A2M, very strong stock. A2M, yeah. I don't want to comment too much on A2M because what is happening here? Purely because we were buying this way back in, and I sort of left it off the buy, and I kept thinking it was getting a bit overbought. So I fell victim to trying to guess and not trading. No problems, Greg. Any questions you may have, mate, feel free to either put it in the chat or later on just send us emails if you want to. If you got some questions that you want to ask on charts or anything at all. I'm assuming you got our email address, support@tradesetup.com.au. Yeah, so this A2M, if we go back to, so we were looking at as it popped up through even looking at it a lot earlier. We've had a couple of trades on this, a couple of positive trades up through one, bit of a back off. I think we had one, we were looking at around here, but then I didn't like that rejection, through 2. And you can see this nice contraction back to the MAs, reversion to the mean style of trading. And then off here, we had another little trade. I think we had a minor gain on that one. Then we had something after that, but we missed the bulk of it, which is, like I said, that's why I don't like talking about it too much. It kills me. Yeah. Watching success beat me to it. There you go. Yeah, so I think I was expecting a deeper correction, but you can see these corrections, that's what I'm saying about not trying to guess when they just consolidate around those highs, like this one, for instance. It actually can lead to a nice healthy move. So that's what that's signaling rather than, so we got through those highs there. When we should start popping up through the highs, this move up here, I think I got caught waiting for a deeper correction, that secondary 1, 2, that moves down to look for a buy entry. But what you get instead is really that's a strong sign that buyers are well and truly in control. When you don't pull back to the, reversion to the mean style of trading, you don't pull back, you consolidate around those highs, you hold the highs. That's really strong sign that buyers are well and truly in control there. And they can lead to another strong move higher, or that's just all part of another, a one big move up, which it was in the extent. Right up here, again, I just can't trade it. I can't buy that. I'd rather, because my headset, I guess my mindset's not right looking at A2M at the moment. I've got caught by missing out. I'd rather just look at something else. See rise from here, yeah. Oh, we'll see how it goes. It's in clear skies. That's the thing with it's in blue skies, so there's no resistance. There's no resistance to sort of combat, to be worried about too much. It's all blue skies from here, so sort of like Tavin likes to say, everyone's a winner. There's nothing where people are probably going to take profits. They're just going to sit on their hands and just ride it up And at the moment, I think if you're long, I think this is a daily. No, I'm on the weekly chart here. Let's go back down to a daily. On the daily, probably around that $5 mark, you've had that extension up through to nearly 650. That extended move higher over a couple of days. For me, if I was riding this one up, I'd have to have my stop somewhere around $5. Whether or not you've taken a partial depends on the individual trader. Yeah, but that's probably the only way to attack it at the moment. So until it has a bit of a pullback and you get some price action like this, or maybe some price action like this, where it just pulls back, but instead of pulling back, it's going sideways. So it's more the MAs are catching up to it than it's coming back to the MAs. And then looking for an entry and try to ride it up. But then I guess the one thing you've got to be wary that, we've had a really strong move up. So how much further can it actually go? So that's why I find it hard to trade. I would find it hard to trade even if it's set up. If it comes back to the MAs, something like this, at these highs, it holds somewhere around $5.75 or $6 and you get another setup, I'd still find it hard to trade purely because of where it's come from and how hard it's going over the last probably 6 months to a year. Yeah, exactly there, Helen. Yeah. So does that make sense here, guys? That's probably why I've steered clear. I probably preempted that, which was stupid in hindsight. But, we've had some good trades since then. It would have been nice to get a hold of this one. Anything else we've got? A to M? Yeah, I can. But we're not going to get much data, I don't think. If we go down to a 30-minute chart, it could have been, yeah, you could probably trade this a few weeks ago with that little pop-up in here, ideally. That's what I'd be looking for. But again, we're just not looking at intraday, probably. Ideally, I would have been looking something like that. You can see that's clearly holding some lower highs, lower lows intraday. I think it pushed down into the close. So when it opened up Monday morning, you got this intraday action which pushed it up through that moving out of contraction into expansion potentially. So I think that would have been an ideal entry through, and that was 540. So you could have took it up through 540. Your risk would have been somewhere around 525, and you can see that's played out quite nicely. Don't like what it did today, to be honest. Was that today, isn't it? Where it's had highs of 640. Yeah, strong move up. Punched up to 640, then bang. Yeah, I'm always skeptical of why, fund managers talk it up. I mean, they're generally talking it up because they're loaded to the hilt. This is my theory anyway. They're loaded to the hilt. They're looking for someone to sell to. And it's pretty obvious it's had a good move up. So that's why I'm always skeptical of why they say it. What's the reasoning behind it? Because this is not buying in the unknown anymore. The market's well and truly on the way higher. So there's always going to be your mums and dads, anyone just kicking it up, buying it on the way up. And you get, if these big boys are loaded, you got to wonder how they're going to get out of it. They can't tell you. They're not going to say, "Look, we're getting out now. The market's going to head south." Then everyone will chase them, and they've got too much stock to get out of. So that's why I'm always skeptical of when you hear these news reports across the wires of, they think it's got a lot more to go. It's going to go up from here. They just might be using that sheerly to the fact just to sell into a strong market, keep that market going while they're getting out of it or edging out of it or reducing the position. So that may be the negativity talking through. But I just think that's basically the way it's played sometimes. Is that TWE, Nandor? Oh, let's get out of intraday, sorry. I did like that through here. We alerted this back. Let me just see. We have sent out a few alerts on TWE. I don't know if we actually got onto it. When was the last one? 1st of March. Well, I should have just left it up. So what actually happened? $12.50. So what it was, the 1st of March 2017, which was somewhere around here, wasn't it? Yeah, so you can see, because it was into new highs, we're looking for that move up off 5. You've had that contraction lower. It built a new base at $10.10, and just looking for somewhere around $12.50 to potentially run out of steam. In hindsight, didn't do that. It's just continued to go higher. So it's done really well. This, I think, it's still strong. Treasury. It's a bit like this one is. It's had a really good move up the last few years. It's pretty much that move up started somewhere mid 2015. It's just been grinding its way higher. At this point now, if you're looking for a continuation trade, it is contracting lower. I don't like that. I want to get rid of that. Try again. You can see a few things lining up at the moment. You've had a move back. It's found some support in there. We've had that push up, move back. We found another support in here. We've had that push up. Ever so slightly, we've found a bit of support through 11.25. You can see there's minor lower highs on the daily. Another move up, a deeper correction, back down to 12.25. So you can see the higher lows are holding. And this is more off the weekly than anything else. And those daily, moves higher. That what do you call it? Extension higher, contraction lower. And then we've extended higher. So at the moment, we're looking for a point to potentially buy into. You can see that stochastics has had quite a strong move down. All right, so you can see they've gone from overbought, approaching that oversold zone, and we're holding up at higher levels than 12.25. So if this market was negative, with that kind of move down, with that kind of pressure on the downside, you'd expect it to push all the way back down and retest that support zone. But instead, buyers are still holding it up on the way down. So if we just drill in on this latest price action, I'd ideally just be looking for, your typical high low. We're in a good little zone. Potentially, I don't know where, but I'm expecting, just looking at this, see if we can draw that in a different color. It's somewhere around, say we give it a zone around there. I'm ideally looking for somewhere in this zone where we can start to see a high low hold. So the market's pushing down, starting to see maybe a bit of contraction like we've seen in the past, and then to work off a high low and a nice clean entry, an inside level, just to see if they can kick higher. And then your first target would be obviously up at 1400, depending on whether you get a 1-to-1 trade or 2-to-1. And then you're just looking for that continuation trade where we're going to extend this leg up and take it somewhere from here. Say that's 12.20 up to 14.60, so it's about $2.20, $2.40. If we can get it somewhere around, what is it, 13.40, get it up to about 15.60, say, that would be nice. But that's just assuming that weekly trend is going to continue higher. We'll have to see how that goes. It's still not too bad. Yeah. It's hard when you see things like that. The ones you miss out on. Yeah, that's me on that's A2M. So whoever brought A2M up, thanks. There's a few soft spots. Like the weekly, yeah. Is the weekly you're talking about on TWE there, Helen? I tend to agree with you. I think I want to see it do something. This time to move down, I want to see it's got to do a bit more work. So I think if you look at it from a weekly perspective, just look at, oh, that's not very good, is it? The effort it's put in there, that's been on a good part of a month where it started, then you started getting some rejection. I'd expect that to do that. So it might be a month till we get some form of setup. Yeah. Yeah, no, I agree with you. It's had this little extension down on that weekly. You can see there haven't been that bigger weeks, and then just this week it's had a good little push lower. So yeah, I want to see. I don't like that price action as such because this red candle would have confused the hell out of me, to be honest. And there was really, if I go back and look at an entry on here, I don't see the entry. I'd like to see, because we're coming off a washout here. We've come straight off this support zone, going bang straight back up. I prefer, you know, something like this. You can see that's a more of a prime entry, even through whatever that high was back then. I find that as a prime entry, which has led to nice higher prices, and you could still be holding in there. You're taking a partial, and it's built again, you're holding in there, but just in here, there's no real entry. So I'd rather see something like this build, and I think that's going to take a fair bit of time. Yeah, I've got those shorts, washed them back out, so who says it doesn't happen in equities? All right, anything else you want to have a quick look at, guys? All right, so the market's up. We're still hovering around, up 5 cents at the moment. I've got to admit, I had this one for a while, NTI, and that's not showing it, is it? NTI I've had for quite a while. I'm close to break even. I bought it way back here, more on fundamental than technical, and it's just been grinding low, and they've come up with some really good news yesterday. Up over 100% yesterday, which was nice. But still, I think it's got a fair bit more to go. MYR. What happened on that one? Yeah. That's trapped the shorts, didn't it? That's more of your divergence play, isn't it? Just look at the last, take a year, maybe 6 months. So this is what we're talking about. Anyone that's new, just trapping those short positions. You've got people that are selling it down. Let's actually just go back to, where are we here? You can see the market's obviously in a downtrend. You can see these lower lows. They're the ones we're looking at. So you want the market to continue a downtrend. You want lower lows, lower highs, and it just continues its way down. So what it did, when we talk about trapping the shorts, was it's turned around. It's done these lower lows, you know, through here, minorly here, and then it's just sort of washed them out here, and then bang, straight back up. And sort of your key level at that stage would have been around the 75 to 76 zone. And it's gone bang straight back out. So you've got people who may have sold it, or they've held it all the way down here. Maybe they've held some longs. They were buying it in here, washed out of the market, and then turn around and bounce straight back up. So it'd be interesting to see what happens from here. I don't like Myer anyway. I'm not really into the old retails, but it didn't really do it. Whether we build another lower high on the weekly basis and then grind their way back down again, or whether we start to hold up here. If we start to hold up here, again, I'd expect it to take a hell of a lot of time. All right. I'll go back up AWE. Let's take a quick look at AWE then. AWE, I don't mind that price action. It looks like it's gone into consolidation, but I'm not banking on it. The weekly chart is still down. There's nothing broken on the weekly chart to say we're heading higher. I have to go back one to see what happens on the longer term chart. And we're right, but this is a monthly chart. I know a lot of people don't put stock in the monthly, but I still look for zones where we're coming where there was buying previously, if nothing's changed. That action there, I would be looking to see, just take a step back a bit, on AWE. It's hard picking at the moment. Some clean setups. You've got a low down here. The market's worked its way down to 30. The good thing is what it's had a strong sell-off into that zone around 30 cents. It's reacted quite strong off there as well. You can see the up moves were quite strong. You can see this sort of stuff. Quite strong here. Another quite strong move. It sort of chipped around there and bang straight up to until it found some resistance and found some more selling up around 95. And then we've rolled over with some lower highs, and it hasn't been that strong apart from probably that initial sell-off here. And then it's starting to get a bit more contained. You can see that the levels, you can see that just by the, gradient of those moves down, you can see that buyers potentially are starting to look to build a higher low at 40, above 40, above 30. Yeah. So I think for me to even go anywhere near it, I want to be, confirmation for me is through, say, 50 to 55 with a push up. So that's a zone there, a push up. We're chipping around in here, bang, bang, bang. I want to see it push up through there, up through 55. Get a good sort of a move up, And even then, you've got a major zone around that 65 mark. So we could easily push up and then start, bang, straight back down. I want to see it push up and then hold that high low. We'll take it one step back. Maybe it contracts. It holds around 50. And then you look for that move up. And hopefully that move can give it a bit of oomph to take it up through 65. And then you start to look up towards 95. But until that happens, you know, I'm not convinced. I'm not going to go near it. It is... Maybe it's got potential, maybe not, but it just looks like it could go sideways. Could be trapped for a while. It could be basing there, yeah. It has been a dog. Yeah, it has. It has. Hasn't done too much. So, look, we'll see how it goes. Anything else, guys? Quickly, actually, before we do, let's call it a day there. Yeah, AWE. So, I think it's got a lot of work to do before it pops up. Anyway, guys, might have to call it a day. Thanks very much for joining us. Have a good weekend for any AFL followers. I hope you follow the right team on the weekend and have a good day. I'm going for Richmond personally. I'll see how they go. Only because it's a Melbourne team. But we'll see. You've got to go against Adelaide, don't you? But yeah, all right. I hope you had a good weekend, guys. And we'll be back in on... Yeah, I'll be back in on Monday. Back in to have another chat on Monday, so we'll see if we can get some more structure to it this time. But thanks again, guys. We'll speak to you then. Cheers, bye. Yeah, I'll be on there, Paul. We'll give it a go. It's not for me, so I'll join in on Monday. I'll see you then.